Welcome everyone to today's virtual webinar. My name is Luke Tannen. I'm Executive Director of Chicago Innovation, and we're delighted to have all of you here for Cash is King, What the Future Holds. Now, our team here at Chicago Innovation has been very busy adapting, as I'm sure all of you have been as well. And we're finding new ways to support and address the needs of all the innovators, entrepreneurs, and leaders in our community. Now, I got to say that at the tippy top of a lot of companies' lists, needs lists right now is indeed the topic of cash. And, we're very grateful to be joined by a few experts who can address both the current pain points that are being experienced today, but also very importantly, also talk about the future and what does the future of accessing capital look like in a post-coronavirus world? Because indeed, I know it doesn't seem that way now, but there will be a post-coronavirus world, and we should all be thinking how to prepare for that. So we'll be talking about that a lot today too. Now I want to let everyone know that if you have a question for the panel, please send us your question via the Zoom Q&A. If the panel isn't able to get to your question during the time that we have, then someone from our team will try to follow up with you after the event. First, though, I need to thank our wonderful, incredible, amazing sponsors who have stuck with us for many, many years, including now. I just want to recognize each of them, starting with our founding diamond sponsor, Theron Technology Solutions, as well as our other diamond sponsors, Accenture, SMS Assist, as well as Wintrust, which is playing a very special role in today's webinar. Also our gold sponsors, Comcast Business and Exelon, silver sponsor, Vetter Price, bronze sponsors, Thompson Coburn, Energy BBO, Brown Castle, and Granger, Clear Channel Outdoor, and Intersection. Thank you, all of you, for your support. It really means a lot to us. I know many of you are in the crowd today. Now I'm going to zoom over the Zoom torch to our co-founder of Chicago Innovation and the president of Kuzmarski Innovation, Tom Kuzmarski.
Thanks, Luke. Hey, it's so great to have all of you here today. We've had over 350 people sign up for today's event. Of course, it's not surprising to me, given the amazing moderator and panelists that we have for today. Who says that you still can't get to know each other virtually? Well, you can, because each of you today have access to everyone's LinkedIn profiles and a list of everybody participating today, which I think is just great. Hey, connection and collaboration is still how we solve problems. That hasn't changed. And in a series of op-eds that I've written for Crane Chicago Business over the past few weeks, I've been outlining a plan for how together we can solve the problems presented by this pandemic through innovation. It's really through innovators that continue to be the problem solvers of our society. It's the same community of innovators that we wrote about in our most recent book called Rising Together, the story of Chicago's innovation ecosystem, which just came out a couple of weeks ago. And it really conveys the transformation of Chicago and how it has become a great hub for tech entrepreneurs and innovators more than ever before. Today's topic is specifically about money. It's a vital topic, it's a frustrating topic, it's an empowering topic. And we really are lucky to have today, leading this discussion, one of the absolute brightest minds when it comes to money. It's my pleasure to introduce a nationally recognized expert on personal finance, on the economy, and on the markets. Author of 4 best-selling books on finance, including The Savage Truth on Money, and a Chicago Innovation Board member and a very close friend. Please welcome Terry Savage.
Tom, thank you. Leave it to you, the innovator-in-chief in Chicago, to come up with a program like this. And you know, I really love talking about money. That is my most favorite topic. But I have 3 people with whom we can discuss this subject and hopefully give our audience today some helpful ideas for their businesses, their own personal finances, and how to access the capital that will allow you to continue to grow your business. So let's move right on to it. Let me introduce all 3 of our panelists. Would you put your pictures up and turn your mics on and go live? Up where there's Ed. Ed Wehmer is the, he's best known as Chicago's most beloved banker. Ed founded, and he's the CEO of Wintrust. And Wintrust is everywhere, not just being a bank, but being involved in all kinds of community endeavors in Chicago. How appropriate as we started, and I'm going to have him tell the story. I said, Ed, how many of those PPP loans has Wintrust made? He said, well, we're like 11,129. We're going to come back to that after I introduce our other panelists and find out about those. Lotika Pai is the Managing Director of Access to Capital at the Women's Business Development Center. Now, the WBDC is a real favorite of mine. For a long time, I was an honorary board member, and it was co-founded by my very best friend, Hetty Ratner, who I know is out there somewhere watching. And I know firsthand how many small businesses the WBDC has helped start for women and minorities, particularly helping them get certified. And today there's big news, which that's the first question I'm going to ask you, Lotika. So about this new certification program for micro business loans. And then what does everybody want to do? Want to meet the leading venture capital guy in Chicago. So Kevin Willer joins us. He is a partner not only at Chicago Ventures, but his history is like synonymous with venture capital and entrepreneurship in Chicago. He's featured in that book, that's for sure. He was the founding CEO of 1871, which taught everybody that an incubator is not something for a little baby or some baby chickens, you know, and he was co-founder of Google's Chicago office. I would say that Kevin is not only just plugged in, he is the actual essential energy source for funding in the Chicago venture community. So the three of you, I'm so glad to have you here. Here's the plan, everybody out in the audience. I'm going to ask a couple of general questions of our panelists and then leave time to get to your questions. And I thought maybe we should start with a kind of an overview. And Ed, I want to come to you first. The big money source that was supposed to be unending, wasn't quite, was replenished. But the big thing for small businesses was this payroll protection program. Did Wintrust really get over 11,000 applications put through to the program, get money going out?
Well, we actually got more applications than that. We had a number of duplicate applications and the like. I think we ended up with like 13,000, but 11,129 qualified as of 10 o'clock today. And it's 100% qualification basically for $3.5 billion. The average loan was $305,000, but the mean loan was $74,000. So we actually did well in terms of hitting the smaller businesses, which was a goal of ours. So I think that we have a great representation. Now we're basically, you know, we would open the portal for an hour or an hour and a half and get close to 6,000 applications during an hour and a half. We'd have to close it down. It was just an incredible thing. And we stood that system up in a week. We didn't have it. Our guys stood it up in a week, and we opened up the night that PPP loans were available. And next thing you know, we were out and flying. So it's really been remarkable. But it's really, our people, really, we had people working all night the other night, getting E-Tran numbers, and because that's been kind of a pain in the neck for people. We had all-nighters work, but...
Ed, is the money going out? I mean, I know the loans were approved, but have people really gotten checks now for this money?
Yes. Yeah, we have, out of the $3.5 billion, as of 10 o'clock today, we had $3.2 billion out the door, working on the rest.
Now, part of this, before we move on to the others, because we're on this topic, there was a little bit of controversy about the PPP program because the money is mostly supposed to be used for payrolls, to maintain payrolls, and some can be used for rent or perhaps utilities. There are a lot of small businesses that said it's not so much the payroll, but we got to pay our rent to keep our lease. And that's the biggest problem, and our landlord won't negotiate. Or if you're a restaurant, we got to pay our utilities because we got meat in the freezer kind of thing. How flexible do you think this program is going to be ultimately?
Well, up to 25% of the amount of the loan can be used for rent, mortgage payments, and utilities and the like. If you want to get it forgiven, this is only to get the loan forgiven. After 2 months, you can apply to get it forgiven, and 100% forgiven if you can meet those parameters. In other words, at least 75% for payroll, 25% for everything else. But if you don't meet the parameters, it'll start amortizing. It's a 2-year loan, so it'll amortize over after the 2 months or 3 months. It amortizes over the remaining period of time as a 1% loan. So it's still, that's just to get it forgiven. Those are the requirements, but still pretty good financing for anything else you wanted to do.
Yeah, where else can you get a 1% loan? Certainly not on your credit card, which most entrepreneurs are very busy doing. Lotika, there's a big announcement from the WBDC today. Explain what that program is. This is a big loan program for very small businesses. Could you explain?
Yeah, it's actually a grant program. So one of the things that we found was that the impact of COVID-19 is disproportionately larger in underserved small businesses, in low to moderate income communities, and especially businesses of people in communities of color. So while there were so many different loan programs that provide capital to small business in response to this pandemic, the city of Chicago recognized that a lot of these small businesses cannot actually take on and absorb additional debt. They just don't have the capacity to do so. So they established the Micro Business Recovery Grant Program. And the program intends to distribute about $5,000 in grants to up to 1,000 businesses with 4 or fewer employees in low to moderate income communities across the city that have been severely impacted by COVID-19. And they could most benefit from the grants. So the applications are open till May 4th, 5 p.m. on May 4th. And we are really, they've really put a lot of thought into it in terms of dispersing the capital really quickly. So we expect that the checks will be written out on May 11th. So it's really
is it first come, first serve? Are they going to look at all the applicants and then pick the ones most deserving?
It's a lottery. So once we receive all the grant applications, we are one of the administrators of the grant, along with Axion, Summercore, Urban League, and also CNI. But once we get all the grant applications in, there'll be a lottery conducted and then an eligibility verification, and then the grants will be dispersed on May 11th.
Okay, is there one website that you can put up, or would you just go to wbdc.org if you wanted to apply?
You could find a link to that from our COVID-19 tab on our website, wbdc.org, and also with the City of Chicago's Office of Business Affairs and Consumer Protection, so BACP, has a direct link to this as well. And I think the mayor and the entire team of the City of Chicago's BACP, they have done a tremendous job in really rolling this out very quickly, recognizing the need and then addressing it very quickly.
Right. I'm going to try and hook you up with the producers of the morning show on Channel 9, see if we can't get you on there and spread the word, because we have a big audience in that group. All right. So that's only one of the many things, by the way, before I leave you, Lotika.
Yeah.
The WBDC is doing a bunch of other things to connect entrepreneurs with money, women and minority businesses, especially. Want to hit on just one or two of those?
Yeah, absolutely. So one of the things that this pandemic has made abundantly clear to us is that while small businesses have the most to lose in a disaster, they're often the least prepared. So for example, with the PPP loans, you had large financial institutions being the gatekeepers, so to speak, for the loan approvals. And a lot of these micro and small businesses really weren't ready with their financials to actually access the loan program or even apply to it. So what we've been doing in terms of educating them and helping them is doing one-on-one counseling. We've been hosting webinars. We've done it with large financial institutions for their constituents, which are the small and micro businesses. We've done it for utilities and accounting firms and legal firms. So we are really trying to reach the micro business owner who wants access to this capital. That is, they really need the financial relief to help them stay afloat, but are struggling to find the right resources to help them get there.
All right, well, my training sticks in here. I'm gonna say the website is WBDC, Women's Business Development Center, WBDC.org, and you can access those resources there. Okay, so this is really interesting, Kevin. You are seeing, aside from being the banker and the grant and the conduit as Lotika and the WBDC are to smaller loans, you're the guy with the money. I mean, it's like one-on-one. You're the venture capital. We'll pick this business. We think you're good. We'll help you grow. What are you seeing out there? Are you having a change of heart? Are you writing some of your investments off? What does it look like from your seat?
Thanks, Terry. I got to first quickly say, Lotika, her husband and I went to grad school together, and I'm just so excited to be on a panel with her and all the great work that she's doing at the WBDC. So thanks for that. And I will shout out to Wintrust and Ed, our portfolio companies that have worked with Wintrust through all this. They've been a great partner and really helped them get through all this process with the PPP. So thanks to Ed on that. You know, the venture world is interesting right now. We are a fund that is active and in market. We just closed a new investment recently. We raised a new fund last year. So venture capital doesn't stop in a time like this. I would say it's been a very, founder-friendly environment for the last, 5+ years for sure in entrepreneurship. There's been a lot of capital, a lot of venture money flowing around. And so I think it's taken a little bit generally of a breather around the country and just trying to assess what's going on in this time. I think a lot of venture firms are spending most of their time focused on their current portfolio companies. We at Chicago Ventures have over 60 active portfolio companies. And as soon as this crisis became clear that it was going to be a crisis and lasting a while, we spent time with all of our portfolio companies going through their plans, making sure they were acting aggressively to respond to the issues with their market potentially, trying to cut costs where they can, trying to make sure they're talking to their customers, understanding how their revenue is coming in or any risk to it. And then looking at, finding ways to potentially bring in some additional capital, whether it's through the PPP loan, if that was appropriate, through a credit line, if they may have that through their bank, or potentially raise money. So really, we've been spending a lot of time making sure that our current portfolio companies can sustain through this time and come out hopefully stronger on the other side.
I want to ask you, because you seem so calm, so very sort of business as usual. This is a speed bump. A lot of America thinks this is like the end, and so could you put your attitude in perspective in general in terms of what the future of growth and entrepreneurship looks like in America? It's a big question. I didn't plan to ask it, but you seem ready.
I'm happy to answer it. So here, I'd say a couple of things. One is this is going to be a challenging time. There's no doubt about it, and we've got to we got to get through it. When you look at past crises, 2008, 2001, obviously different things at work here is more global in nature and affecting everything. You've seen some of the great technology innovations come out of these times. If you look at 2008, companies like Pinterest and Airbnb and Instagram and Slack and Stripe were founded in the couple of years, 09 and 10 after that. If you look back to 01, my previous company, Google, really benefited from that downturn because they had a bunch of venture capital money in the bank, and they were able to hire a lot of the engineers who were getting laid off. And so good companies will come out of this time. And I think it's the founders today that are working the hardest and being the most realistic about what's going on, that are going to survive through this and come out stronger on the other side. You really see the true colors of an entrepreneur as they deal with the challenging time like this. So you got to be eyes wide open for sure. But at the same time, the tech scene in Chicago is resilient. The tech scene in Chicago has done really well over the last decade, and we're in a really good spot. We have all the fundamentals in place, and we'll be stronger on the other side of this. We just have to get through it.
I'm going to come back and ask you about specifics, but Ed, you mentioned, of course, that many of your portfolio companies, Kevin, work with Ed and Wintrust as their banker. So let me turn to you, Mr. Banker. I mean, now the venture guy's got his money in there and he's keeping his companies going, and he's actually optimistic. What is a banker, forget the PPP loans, which was enough. I mean, that was a project that I don't know how you accomplished that. Nobody else seemed to be able to do it like you did. But you also had your ongoing, consumer checking accounts and so forth, but you're also your ongoing business relationships. Mm-hmm. So what did that look like to you? What does it look like now? Are we through the panic stage? Is it going to get better or worse? And how does the bank work with the company that exists out there?
Well, I think that you're not going to know what's going to happen really until 3 months from now. Because right now, the PPP loans, now Main Street loans are coming online, finally defining what those are going to be. Just today, they came out with a new term sheets for the 3 types of Main Street loans that the Fed will be supporting. Banks, the regulators are actually being very accommodating now, understanding the problems we're in terms of not beating you up if you give somebody a 3 or 6 month deferment on their principal or interest. We're doing, somebody comes in and asks for that, they got a good reason, we do it. And to me, it's like this whole period is like time stopping for 3 months. Everybody plays the game, the Fed's throwing all the liquidity in, it stops for 3 months, you can't pay your rent, the bank tells the landlord, you don't have to pay your interest, it just, everything's gonna stop. The government's putting enough money in here to make sure it all works, although they are getting pretty squirrely on the PPP loans. I like to say we're getting tarped on that, like they get it out, then they keep changing the rules across the board, which is crazy. I thought the idea was to keep people in their jobs, not who you gave it to. It was to keep people in their jobs and avoid furloughs. I have a number of companies that are giving the money back. They're going to now furlough the people that they weren't going to have to furlough because of the reputational risk they're putting out there. It's just crazy. But we're in contact with all of our customers. We have a $1 billion franchise portfolio. Now 80% of that portfolio are QSRs, quick service restaurants. I like to say we have to look up at the menu, not down at the menu. They're all doing, and probably 3/4 of those are McDonald's. McDonald's is doing extremely well right now in terms of the drive-in windows working, the sit-down restaurants. They all came in, they got deferments, we got them PPP loans. It's all going to boil down to how fast we can get back in the swing of things. I think that America is going to jump back pretty quickly, depending on when the government lets you loose. Maybe a U, maybe not a V, but a U, hopefully not a W. I mean, we all heard we go through the whole alphabet for what everybody's saying about how the heck to get out of this thing. But it's all about knowing your clients, knowing your customers, keeping in touch with them and helping them out. And as long as the regulators are being accommodating and aren't going to hit you upside the head, we'll do it all day long because we're all in this together.
So this fear of the chain that if either the apartment renter doesn't pay the landlord, or the restaurant that occupies the ground floor doesn't pay the landlord because they're shut down because they can't, they didn't maybe get a loan, then the landlord can't pay his utilities and can't pay his property taxes and can't pay the bank on the mortgage. Here's the biggest question. You think we will get through this cycle with enough flexibility and enough kind thoughts like you're doing and kind words that we won't have to, that the system won't break? Do you think it'll bend enough to accommodate everything before it breaks?
I think as long as you have an accommodating authorities out there, the government and the like, will let you work through it, understand that they actually caused it by causing the shutdown and the like, and they get it. I think we'll be fine. I think Chicago in particular is very resilient. I think the American people are very resilient. You're seeing people go back right now to work. I think a lot of people unfortunately believe the whole thing's been overblown. They can't wait to get back out. You know, this is no worse than the flu or X, Y, or Z. I think they're wrong, but I think we have to be very careful about how we come back. That's going to be really interesting, is how we come back in terms of spacing and keeping, until they get the vaccine out, which I think American innovation will get that out by the end of the year. I'm convinced that'll happen. So I think it's all going to depend on, you have to go 6 months or 9 months before you get back to normal. It's going to be a lot worse than just getting a good back going and start, hitting the button in June.
Gotcha. Now, Lotika, you must be sitting there turning green with envy, because all the businesses that deal with their venture capital investors, or they have wonderful bankers, to hold their hand and say, yeah, we can be flexible. But the people you deal with don't typically have that kind of resource. I mean, I think I'm right. There are smaller businesses. A lot of them started on their own savings or credit cards or relatives' money. They're shut down. They don't have anybody to put an arm around them like Ed and say, we're going to see you through this. Is that what the WBDC is doing for its clients now?
Yes, and to Ed's point, I think one thing I would like to make a note of, based on the numbers that the Federal Reserve kind of announced yesterday on the unprecedented jobless claims that we are having, the stay-at-home orders having shuttered so many small businesses across the country, the Fed indicated that minorities were among the first to lose their jobs. So these are the people who are least able to bear the financial risk of actually losing the jobs are the first ones who are losing their jobs. So I actually think that shutting off the economy is not like, you're not switching off a light in your house. So switching it back on is actually going to take a long time. It will not return to pre-pandemic productivity for some time, at least in the communities that we serve, because a lot of the individuals and small businesses who are in a vulnerable position will experience, permanent losses. And I believe that we will experience, at least for them, a much longer economic hangover when this public health crisis has kind of come to pass. And barring some healthcare miracle, like us having a cure or a vaccine, which, from Ed's mouth to God's ears, by the end of the year, which should be relatively soon for a vaccine, I think at least we should be looking at a minimum of a year of rolling shutdowns. You're not going to have everything come back up, instantly.
So I'm going to ask everybody this, and I think I'm going to start with you right now. What's your best tip that you would give to someone in that position? Is this the moment when a small business says, how much more do I put into this? I had an IRA that I rolled over from my job before I started my business. Do I go into that? Do I charge up my credit card at 26% or something like that? Are you seeing small entrepreneurs trying to make that choice? Because I'm going to come back to the guys that are the ventures and the bankers and ask them the same thing.
I think at least in the communities that we serve, they make those choices constantly because they are very strapped for cash and access to capital. At least in communities like this, it's traditionally very hard. And right now I feel like and this is like, it's a very strong opinion that I have, but I feel like all the financial solutions that we have in place by the government are just Band-Aids. We're just putting a little bit of a Band-Aid to help them tide over to the next 3 or 4 months. It doesn't really take care of the systemic longer term problem. And also right now you see that the markets have trended up in response to all this financial stimulus that we're pouring into the economy. But honestly, if this continues month over month and quarter over quarter, this aggressive fiscal expansion is going to, markets are going to take a dim view of that. So there's a much broader fallout from this. And I feel that at least for the small and micro businesses that we work with, we are asking them to really take a step back and look at how they can innovate within their businesses, because businesses are not going to get back to, pre-pandemic realities that they were experiencing. So what can you change to be better positioned to survive in the longer run? So, just stay away from cognitive biases that make you focus on the short term right now and just think more longer and medium term. In terms of
no wonder everybody's raving about what you're doing over at the WBDC. Very impressive. That's years ago. It started out with, yes, you can get out of your house and make your own little business, but you're now doing kind of Harvard Business School stuff for micro businesses. That's great. Now I'm going to ask the venture capitalists, because somewhere in here, this isn't all la-di-da. You're talking with these businesses. Are some of them having to give up another pound of flesh, another piece of equity to you to keep you in the game with them? What is a small business that's supported by venture capitalists facing right now?
Yeah, so it's very, the nature of the venture world is that we invest in companies, high risk companies, a lot of times early on, and take an equity position in them and help them out, value add, operating expertise, business development related stuff, marketing related stuff, talent related stuff. We help them out, work through them, but the whole time they are burning, right? They're not making any money, and they burn and grow, hopefully to a point where they're able to raise additional capital to help them grow further, right? And so, we make those investments and we may follow on to the company, but we as a venture firm don't have unlimited reserves where we would just keep throwing money at a company, right? Inevitably, there's that time where that capital ends. So, you try and be helpful in a time like this if you can, but at the end of the day, a lot of these companies, the first focus they've had is how do they cut their expenses? How do they get to cash flow break even, and how do they, hunker down and sustain through this? In some cases, that includes laying people off or furloughing, and that's reality of the situation. Maybe they grew too fast, hired too many people. Nobody likes to talk about that, but the nature of these venture-backed companies a lot of times is that they maybe, sometimes got ahead of themselves. So a time like this is where they have to hunker down and kind of cut back and be more realistic about everything. So it's a tricky time.
Yeah. All right. Let me ask you this then. Well, do you foresee a small percentage or a larger percentage of some of the companies that you have backed that you thought were a good idea and you gave them capital and they've been burning through it? Are you going to have to tell some of them, that's not going to, we can't put up any more money. The
Absolutely.
Business model has changed. You're going to do that.
They totally understand that. That's the nature of this. I mean, that is something that comes with the territory. What I will say, you'll see some of, and I think we're already seeing this, is some venture firms, I wouldn't say this is as much local, maybe coastal, are looking for opportunities here. Maybe that's the nicest way to say it, where they might not be invested in a company, but the company is desperate to raise some money, and they might be able to provide a lifeline, but it would be at not very attractive terms for the founder. That may be where the Vulture Capital name comes from. But we are planning to do that, but you're seeing maybe some signs of that from other parts of the country. So it'll be interesting to see how this plays out. But entrepreneurs have to have all options on the table right now. It's reality of this. And it will, again, make them better in the long run, but it is a very challenging time.
So I want to just push you because I've never gotten a chance to ask a venture capitalist this, and this is the perfect moment to ask it.
Yeah.
It may not be you, but whether the Vulture guys or not, how far can you push an entrepreneur who believes in his or her business and wants to grow it? How do you know how far you can push them to give up a piece of capital in order to survive? A piece of equity, in order for them to survive.
Yeah. I mean, I don't think this is the time to be taking advantage of entrepreneurs and all that. So I don't know what that is, because I wouldn't be going after and trying to do that. I wish I could give you an exact answer, but the reality is, if I'm an entrepreneur right now, I'm trying to leverage all the different ways I can to keep the business, going, rather than giving up a big chunk of equity to someone. So that should be the last.
I understand it. And let me, I just want, this is like asking, are you open for business? But between processing these PPP loans and everything involved in them and dealing with your existing customers, are you open to the possibility of, let's not call them desperate, but yeah, sort of desperate companies that have a little bit of traction anyway, coming to you and saying, could we be your customers now? Sorry, we weren't before.
Well, again, you have to do safe and sound underwriting. I will say that your best loans are made in the worst times. So yeah, we are open for business, and we do look for opportunities. We had our doors open for not just customers, but non-customers, and people getting turned away from it by the big banks are in our numbers, in our PPP numbers. We got a great halo effect right now. We are open for business, and we believe we've got almost 2 years worth of prospects and wanting to move to us, and right now, and it's so we're in that process, and we're a growth company. You don't usually hear banks being growth company. We're a growth company, and this is an opportunity for us to continue to build and to grow, and on the personal relationships that banking that we're founded on. So I will say, I want to go back to what Lotika was saying, is I don't exactly agree with you 100%, because right now you can have your mortgage deferred for 3 months. The unemployment benefits that are coming out are, in a lot of cases, more than the guy makes normally.
Yeah.
And with the PPP loans, you should be able to find a way to get through this for a couple months. I understand this goes on to longer and longer. The ramifications from the monetary and fiscal stimulus is going to kill us in terms of inflation. Right now, commodities are falling, so don't worry about inflation, but inflation will have to come in at some point in time as the money supply keeps going and going and going. But I think that if we can get through this and open up, it's going to be a little faster than everybody anticipates. This economy coming back, because people want it to come back.
Yeah, everybody's on the same team in that regard.
Absolutely.
We have a bunch of questions coming in from our audience. So a couple of them came in by text early, and then maybe we can put those up. Let me see how I can organize this technology to get Q&A. Hold on one second. Here we go. All right. So someone asks, can I use first names? Sure, I'll do first names. Nancy asks, what happens when your rent is a bigger cost than your payroll and you take one of these loans? How do you advise them in terms of getting a PPP loan? Or should they not take it at all?
Well, I think, you know, you're going to have to, if you can pay a 1% loan back, run the numbers, and part of it will be partially forgiven based on those numbers, but you won't get the whole thing forgiven. So you have to run your numbers and talk to your banker, see how it works. And, you know, hopefully they'll have a round 3 here, because round 2 is going to run out pretty quickly, I think, probably today, probably tomorrow or the next day. Round 2 will be done, and we'll see if they come back with round 3. But I would certainly want to take that just for the option of forgiveness. And unless you got a better source of capital than 1% money and pay it off over, you know, the 2 years, I do it.
Okay. Kevin, someone asked, what other categories or types of startups are you looking at, given the potential behavioral shifts that this whole pandemic is starting?
Great question.
Is there a certain category now that's coming to the fore?
Great question. And so, and I meant to mention this earlier. So first, I would say that across our portfolio, we're a regionally focused fund, kind of sector agnostic. So all software companies, but they're in many different sectors. And some of the companies have grown during this time because they're in digital health, or they're in logistics, or a company like Cameo is getting a lot of traction right now because people are home and apparently bored, and athletes are jumping on there because they don't have any games to play. So some categories have done well, others more travel related, you know, those kinds of things have not done as well. So different types of companies are going to perform in this environment or not. Going forward, you're absolutely going to see opportunities in areas like education technology. Obviously, with all these students, I have a 12, 10, and 8-year-old, you know, e-learning from home, and just seeing how they're engaging with their classmates and teachers and learning remotely. Remote work is obviously, you know, going to transform through all this, and the tools that we use, not just Zoom, but what applications are built on top of Zoom, right? Digital health, right? Telehealth, you know, was always there. Everybody talked about it, but and some people used it, but now it's just been put on steroids overnight. So what innovations you're going to see around that, and where are the opportunities there? On-demand work, you know, folks might, you know, could people not have to live in Chicago or in a dense urban center, but work for companies remotely? That should be more accepted than it ever has been, which I think actually plays into the tech scene well, because you do see Silicon Valley has always been kind of the heart of a lot of stuff. I feel like this is going to accelerate the opportunity to not have to be based in one dense environment all the time.
I love, okay, you know, I just want to push you on this, because I can hear 100 voices out there saying, ask him if I could please come and talk to him. So, I mean, I hear that in my head. I know that you're out there saying that. So my question is, you just tagged somebody out there, maybe 24 people who have their entrepreneurial in that field, and they want to get to you or someone. Are we going to, hey, Tom Kuzmarski, are you there? Are we going to put on an event like a dating game kind of a thing? Well, we can't do that, but we can do it online maybe, for people who want to get in touch with venture capitalists that have ideas that are particularly now coming to the fore because of social changes. How would they find you, Kevin?
Oh no, I mean, we're easily accessible. I mean, I'm you know, based in 1871. Obviously, people aren't, you know, coming into the office like that right now. But at Chicago Ventures, I mean, we like to see things. We would like to see things that are kind of in our wheelhouse of investing. you know, because we like to lead the seed rounds, write a $1 to $2 million check into a nice, you know, nice seed round. So want to make sure that it's a good fit. If you're just coming up with the idea now and just getting started, happy to take a conversation and give some feedback, but might not be a fit for an investment right now. But you know, definitely.
The website is Chicago Ventures.
Sorry, www.chicagoventures.com. Or
there you go.
connect with me on LinkedIn too.
Okay, great. And you see that in your anybody here sees LinkedIn. Okay, because a lot of people are going, wait, I got to get to him. Tell me how to get to him. Lotika, someone asked that you please publish this whole new micro business recovery grant thing to the South Suburban Black Chamber of Commerce. This is a brand, I mean, this just came out today, right? I got the email this morning. What are you doing to particularly get the news of this micro business recovery grant out? Especially, it ends when, the applications?
Monday at 4 p.m.
Oh my gosh, we got to work fast.
Yeah, so we've been, you know, kind of pushing a lot of PR out. The city has been doing the same. We have been working with a lot of other not-for-profits here in the city of Chicago to get the word out to their clients as well. So please go to our website. On the COVID-19 tab, we have a link that kind of leads you directly to where the grants are. And, you know, it's not just this grant. We have listed every single grant that is accessible for micro businesses currently, right now, that is open. So it's all on our website. Please go check it out. These are really good resources that you can tap into to avoid debt overhang in the short term. And, you know, and also look at the loan programs that are there. And I have to give a huge shout out to Wintrust, because it was the first bank that actually reached out to us last week when the first round of PPP money closed out. Like, you know, how can we help your clients? Their community reinvestment group reached out, and it was such, you know, they listened to our advocacy efforts. So I am not surprised by the numbers that you have, Ed. I mean, really good job. We have been pushing a lot of people your way.
Oh, well, my goodness. I'm not the only one that wants to give you a big hug. Lotika, again, the website is wbdc.org.
That is correct.
Ed, any thoughts now on, let's move on to the future a little bit. Any thoughts on what individuals, I'm going to move back off the businesses and the entrepreneurs now, could or should be doing? I think there are people that are entrepreneurs, but they're also hurting from a personal finance point of view. I guess I touch that because I answer literally hundreds of emails. The terrysavage.com website went viral when I started doing a Q&A about stimulus checks. And I was introduced to a part of America that the government has, I don't want to get on a soapbox here, but they've paid the least concern to people that get SSI and don't have banks, for example. And at first they were going to make them sign up on some website. I kept calling the IRS saying, these people don't even have smartphones. The library's closed. They can't get in to sign up. So the government, IRS, finally said, oh yeah, we'll put that on your SSI card where you receive your benefits. So there's a whole step of people who are really in the disaster zone. And then there are a lot of people who are hardworking and never thought they would get caught personally without either a job or with their own small business being teetering. Have you got some thoughts from the banker on that?
Well, I think that, you know, you need to protect your income, and there's unemployment is as I said earlier, the benefits are huge right now. Between the state and the federal unemployment, you can go home with some reasonable money. I think that you should, if you're in that situation, credit cards have to do something. We don't issue credit cards, so we're not in that business. But I think credit cards are going to have to just come up with some sort of abeyance for you. But certainly, if you're in trouble, go to your mortgage, whoever your mortgage holder is, and ask for 3 months of abatements. They'll add it on to the end of it, so it's just going to add. They don't, you know, it's going to have to be paid like right at the end of your forgiveness period or your abatement period, but it'll just go on to the end. You'll just add 3 months to the end of your mortgage. Same with rent. If you can't pay the rent, go to your landlord. The landlords, the mayor is coming out with this. I forget what she called it. It's an oath that the major landlords and banks are taking, that you're not going to get foreclosed on. We're going to give you the 3 months if you need it. And the same for rent. You're not going to get kicked out. We're going to give you the 3 months. Take it. It's all about cash right now. and then hope things get back up and running as quickly as you can. But the only thing that they really have not talked to specifically is credit cards yet. And as you know, credit cards have gone up again and again and again to a high level, and you're going to have to do something there. But there's plenty of there's plenty of cash out there. The Fed and the Treasury are really making it available to you. Take advantage of it. You should be able to get through a couple of months. If we go farther than 3 months, all bets are off as far as I'm concerned. So.
Yeah, so all fingers crossed. And I think this is.
And you want to hug me because I don't have any facial hair, right? Everybody's growing beards during this time. I
think that's wonderful of you, right? And I don't hope you can't see the little grays in there. But all I can say is, I do want to hug you virtually. I want to hug all three of you virtually. I'm going to give you a chance before we close this out. I know we have. Do we have any more questions? Let's see if Tom wants to put some up there. I don't see any new ones. Let me just see. Here's one. Here's from someone named Sharon. The WBDC is doing an amazing job, yes, but the small business startups are dying on the vine. I'm 10 and a half months into my business and threw everything I had at it, and there's absolutely nothing for me in businesses like mine in the Southwest community. Lotika, maybe it's time to give it up. You don't want to put good money after bad. Latika?
That's such a hard decision to make, right? Like, when
tell me about it.
Point? I have been an entrepreneur in the past as well. So I did have one successful company and then one that I did shut down. And shutting down a business is hard. You have people who depend upon you for payroll. You have invested a lot of time, money, and effort into it. You have to do so much soul searching. And I remember my first startup, it was in the ed tech space many years ago that I shut down. It takes time to recover from that, right? Because your sense of self-worth takes such a beating when you shut a company down. Just to emerge from that and separate your sense of self from a business failure that may not have been your fault. There were externalities like network externalities that impacted why your business did not do well. In this case, it's obviously the pandemic. So it's not an easy decision to make. And I would say, again, I always keep going back to it. Run your numbers. Does it make sense? Do you have enough cash on your books to keep you in business for the next 3 to 4 months? You really, really need to have a good handle on your finances to be able to make that decision. And nobody can make that for the small business owner. I think it's something that they have to sit back, evaluate the books, look at the market conditions, see what opportunity for them to innovate and potentially participate in this newly formed economy that we're seeing. But if not, then these are decisions that need to be made.
Can I ask that women to call you? 312-853, what is it, 312-853?
Oh my God.
853-3000, is it? Yes. Eddie, quick, text me the phone number for the Women's Business Development Center. Okay, and I'll put it up. Because are you answering calls like that?
Yeah,
okay.
So they can just call up in our office and schedule a time to speak with any one of the counselors. They can ask for me, and I'm happy to get on the phone and talk.
Quick, Hetty, send me a text. Someone else, I'm going to answer a question. And Ed, I'm going to appeal to you. I wanted to do this maybe before or after. This is the question, 312-853-3477. There you go. Thank you, Hetty. 312-853-3477, the Women's Business Development Center, WBDC.org. Now that's a paid commercial. Okay. Someone asked me, and there were a couple of questions along these lines, that this is, what are your recommendations for those of us who work as independent contractors, maybe started their business on the side, and having difficulty qualifying for unemployment? I want to tell you something. And Ed, I wish you would just pick up the phone and call the governor. About 4 weeks ago, I called some mutual friends of ours. The governor may know who I am, I don't know, but I'm not a close friend of his. And when this started, I said, oh my goodness, this is going to be a disaster. First of all, there are going to be millions of people applying for unemployment. The offices are closed, and the websites were never designed for the numbers like we're getting. And I have since been put in touch with some people there. First of all, they were swamped with applications for unemployment. Second of all, you know, the minimum unemployment check you get in America, in Illinois, it's based on a formula. And by the way, Illinois is not the worst place, Florida is. They don't have a system that works at all, but you could get $51 minimum up to $484. That's a standard unemployment for 26 weeks plus 13 weeks. But as part of the CARES Act, you get $600 federal money on top of that. So there are some people who are getting maybe close to $1,000. Now, the first part was getting those people registered. They're pretty much, from what I can tell from the emails and posts I get at terrysavage.com, that's pretty well happened. But they have not yet been able to put together the separate site that needs to be put up to process the provision in the CARES Act for self-employed people to qualify. Now, these are not people who get W-2 forms where they could check their employment at XYZ company and yes, they were laid off. So I talked yesterday with the most senior person in the IDES, and they are hoping by the week of May 11th to allow self-employed people to register. Now, yes, it will be retroactive to the date that you claim you were unemployed as a self-employed person. And I said, who on earth is building this website? I've got guys that work on my website. The most they say is, well, we'll get to it over the weekend, Terry. Fine. What? And you put your entire PP thing up to process all these applications, which are complex. Could you please call the governor and offer him your services?
I don't think he'll take my call, but you know, as of last Friday, some 1099 people, self-employed people, can apply for PPP. That opened up last Friday. Yeah.
It hasn't quite opened up yet, according to the
PPP. It has opened up. You
PPP,
have to have your you have to have your 1099s and ready to go. But you can get PPP money. The documentation that you're required to give is a little bit different, but yeah, that's available. Okay,
that's a piece of news to me and to everybody online. All right, so we're coming to the end of our time. You've all been wonderful. I'm going to ask each of you, and Lotika, I'll start with you. This is not meant to be a pep talk. This is a reality check. So why don't you come to this audience, who I think what you all have in common is you're entrepreneurs. You've been impacted in multiple ways, probably by the thing that's going on now. That we titled this Cash is King. And of course, these questions revolve around money. There are a lot of other questions, I'm sure, on your mind. But in terms of money-related advice, and if you want to make it a pep talk, that's fine with me. Lotika, what is it that you want to say to our audience?
So I think two things. One is, as you're taking on a lot of these loans, just plan for debt overhang. Like, how are you going to service the debt? Make sure you have sufficient cash flows to service it. And then also for small business owners, we want them to think about and incorporate into their growth plans, operational efficiencies, you know, not just around like increased hygiene requirements and social distance carrying over and, you know, remote working processes. We really want them to start thinking about trimming overhead, you know, protecting their cash flows. Do you need to renegotiate your payment terms with your vendors and your suppliers? Do you need to get access to a line of credit with a bank, which a lot of micro businesses did not have. Small businesses did not have that either. And, you know, you need to think about addressing whether you have weak links in your supply chain, and maybe look into business interruption insurance coverage, which I'm sure a lot of businesses didn't think about previously. So I would say, as you are thinking about your business and the cash flow needs for your business, plan for the long term and not just the immediate 2 to 3 months.
That's great. Who will go next?
I'll go.
Go.
Listen, you know, entrepreneurship is hard, right? It's hard to start and grow a business. There's no doubt about that. Entrepreneurs are the backbone of the U.S. business world, I think, U.S. economy, and they're some of the great risk takers of our time, right? And they're building businesses and they believe passionately about them and they're doing the hard work out there. This is going to be a tough time to run an early stage business and grow it up. It's hard, it's challenging, but it will make you stronger and make you more disciplined and more focused on customer needs, what kind of resources you need in the company, and it will evolve a lot around culture too. you know, a lot of our CEOs are talking to us about what should we do, scenario planning, all this stuff. Critical is the ones who are communicating well to their employees and sharing the goods and the bads and not sugarcoating it and just being transparent about it. And that is so critical at this time. Being a great leader of a company is all about communicating effectively with your teams about the challenges ahead so that everybody's on board. And I think, you know, hopefully everybody who's running a business out there is taking that to heart.
Great advice. And Ed, how about the big hug, the big banker hug that we all need so desperately, including me?
Well, you know, I started Wintrust at a card table with 5 kids and 1,100 square feet in a bombed out building. I've lived through tough times and hard times like this. And I always remember there's a poem, Rudyard Kipling's If, and there's one line that if you can make a heap of all your winnings and risk it on a game of pitch and toss and lose and start again from your beginnings and never breathe a word about your loss. We're going to get through this. You got to tough it out. You got to be smart. Cash is king is the perfect name for this presentation here. Conserve your cash, be smart, and do the best you can, and just keep your head down and keep going, because if you're an entrepreneur, it won't be the last time you're faced with a critical issue. Maybe we can all get in it together and say, oh, and say, woe is me, but it's the last thing you want to do. You want to, you know, let's go, let's get it done. I think that's the only way. It's a little bit of a pep talk, but what other choice do you have? Either give it up or keep going, right?
I love it. I love it. Everybody's head is nodding, and in the audience, I'm sure everyone's smiling. We thank the 3 of you, first of all, and hope maybe that we'll be able to come back together again in 6 months and smile at some of this advice that you've given us all. And I want to thank you for allowing me to moderate this, because it made me real happy. And now I'm going to turn it over to Luke, who I think has some announcements about the ways you can get a recording of this and all. Thank you, Luke, for setting this up, just what we needed.
Well, it's our pleasure. And thank you, Terry. Thank you, Ed. Thank you, Kevin. Thank you, Lotika. I got to read you one of the last comments I just read on the side in the Zoom video chat. After Sharon says, after absolutely too many webinars, I feel like this content and delivery has been extremely impactful. And I couldn't agree more. So I wanted to thank all of you for your time. Indeed, this recording is something we'll send out to everyone, as well as the entire Chicago innovation community, because your wisdom, your ideas, your perspectives, everybody needs to hear it. And I just want to thank you for really having an open, honest, and frank discussion about what is a very challenging topic these days. And I know we started talking about PPP loans, and we're gonna end with PPP as well, but it's a different PPP. And this is directed at the speakers. I wanted to tell you that your advice was practical, your impact in Chicago is powerful, and because of what all of you do, you're enabling a lot of people to persevere. And I think persevere is the word of the day. And so whatever we can all do to help each other persevere is time well spent. And at Chicago Innovation, we are going to continue to do whatever we can to help Chicago's innovation community persevere. We'll continue to be a source for resources, for shared learning, and hopefully for inspiration and hope too during this tough time. So we will have many more virtual events. You can count on that to help as many people as we can. And we look forward to seeing you with them. And in the meantime, continue to stay positive, stay innovative, and stay well, most importantly. So thank you all for being here and for joining.